Sure. So I'm Ben Elvidge. I'm the product lead for uranium.io, which is the world's first blockchain-based platform for trading physical uranium. So it's an asset class that's of critical importance, as most people will recognize. But historically, it's been really difficult to access and got very high capital barriers. So it's roughly around $6 million to enter. And so actually what we've been able to do with support from the Tezos Foundation is tokenize some physical uranium and put that on chain. And so we've reduced those barriers to entry, making it accessible for both retail investors and institutional investors, creating greater liquidity. If I take a step back to the current market and the way that operates, so right now it only trades over the counter, and it only trades in 100,000 pounds in weight, that's LBS, lot sizes, which at current spot price is about $6 million. And so the market is quite opaque. It's quite hard to get a definitive price. And so what we wanted to do was take that opaque market and, again, through support with the Tezos Foundation, they loaned us the capital to buy a minimum lot size. And then we've got that securely stored in one of the 3 secure storage facilities around the world. And then we've got a tokenization partner. We've tokenized that, and we've built a trading platform on top of that. So the uranium market has, outside of Russia, there's 3 locations where physical uranium can be stored. There's one in Canada called Cameco, one in the US called Converdyn, and one in France called Urano. And so we use Cameco, and they were introduced to us through our partner Cozen Uranium. So we have a big part of this project has been about all of the partner alignment, and it's been a project that I joined last year, but has been 2 years in the making before that because of the legal, regulatory, and what you'd expect, and also the partner piece. It's super simple. We've spent a lot of time trying to get the balance of streamlined onboarding and also making sure we're in line with our regulatory obligations right, but we've got it to a point where it's as simple as going to uranium.io, putting in an email address. If you've got an EVM compatible wallet like MetaMask, you can just connect that wallet, transfer some USDC, and then click buy, and you can buy an ounce of uranium for about $4 as it stands right now. So that's as simple as it is. And then in the background, we do on-chain analytics, where we focus on any red flags. And if we get a red flag at that point, someone maybe has to do KYC, but it means that we can get more people access to this critical asset class without having to sort of have the barriers of KYC up front. Fractionalizing it is the perfect word. So that's exactly, so it really is, I think as we look at the evolution of tokenization, the really exciting thing about this is a real world use case, right? This is a true, how does blockchain move a market forward? This is a prime use case of that, right? Because unless you've got a cool $6 million, you can't really get access into this asset class, but it's an asset class that has a lot of fundamental benefits. So we think it's really important that people can have access to it. Yeah, look, and I think we're here at Paris Blockchain Week, right? And it is a key theme. Tokenization is a key theme. And I think what's really exciting now, and certainly in my mind, I'm going to say this, right? But uranium.io is a good example of this. It feels like we're moving beyond just tokenization for tokenization's sake and bringing access to asset classes that were previously unreachable for the individual investor. Through tokenization, we're making those accessible, which is beneficial for if I think about uranium, beneficial for the whole supply chain, right? If we, as we have aspirations to create the liquid marketplace, we help price discovery. That's beneficial for everyone that wants to trade and just be a financial investor in uranium, but it's also beneficial for people in the supply chain, like fuel buyers, like utility providers, because they're getting more of a transparent price mechanism as well. So there is a market price. So there is some data provision out there, but it only prints every 20 minutes in US and UK market hours, and that's done really through voluntary submissions by brokers. So what actually we get now, what we've got now, is being able to have real-time trading and therefore a real-time price. But as we launched in December and we're now scaling it, we don't quite have the liquidity yet to be the de facto price. So we have partnered with a market maker to be able to just ensure that the price is always within a reasonable basis to the underlying from the pseudo official price feed right now. So the regulatory part is a really interesting one. So there's a couple of different angles to that, right? One is spot commodity trading in most regions is not regulated as an activity. So trading gold, trading uranium in the physical market isn't regulated. But we've spent a lot of time ensuring that what we do, and we use the English common law trust framework that enables us to be able to essentially represent property interest, read into that beneficial ownership of the actual physical uranium, which is the trust assets. And so that means we still are unregulated. So we formally confirmed it's not a security because there's no SPV layer. So we think that's quite unique. But also in terms of the other aspect, which is really important as we think about tokenization, is that you can, because your certain amount of tokens represents actual physical uranium, you can take physical delivery. So it's important to clarify physical delivery in this context, right? So I mentioned the 3 converters or storage facilities earlier. So if you have an account with one of those converters, so that takes quite a while to open an account because they want to know who you are, what's your interest in uranium. You've got to pass all the other checks from a regulatory perspective in terms of non-proliferation. But if you have an account with a converter, you can say to us, actually, my 1,000 XU308 tokens, I want to redeem those. Can you deposit that into my converter account? So being able to move the needle and have that real world use case and bridge the gap between TradFi and sort of Web3 is super important. And I think that's what's going to create the next phase of the evolution and adoption of RWAs, moving beyond just DeFi tokens, supporting DeFi tokens, right? It's actually about bridging that gap, and that creates the wider adoption, which is beneficial for everybody. Yeah, it's an interesting one, and I think, I think what we're seeing, and I think a lot of people will say this, right? The current market is very much moving into a risk-off state. So I think it's certainly earlier this week we saw that actually crypto and Bitcoin are very sort of correlated with other risk on assets like equities. It's hard to sort of say that there isn't any relationship between the two. But that's why I think it's super important that we're bringing, and other people are bringing, sort of uncorrelated assets on chain, because it gives people that versatility to sort of weather the storm and see through, if it is going to be the next winter, see that through by having some diversification benefit. Because uranium as an asset, if we look back over the last 5 years, spot uranium has very low to no correlation with Bitcoin, with the S&P 500, with gold or oil. So again, it's about broadening access to enough assets that you can sort of diversify all the good practice stuff. If I think back to my TradFi days around, diversifying your portfolio and all that good stuff. It's a really interesting time. So we've seen, I think everyone's seen the demand dynamics and all the news at the end of last year, whether that's Microsoft reopening 3 Mile Island, whether that's Google and Amazon's deals with small modular reactor firms and sort of looking to secure their own energy. So, and I think the government sentiment towards nuclear energy generally and globally has sort of become a lot more favorable compared to where it was. So from a demand side, we see huge upside. And so that persists, and already within the market, if we look back at last year, there was already a big demand and supply deficit. So demand, was estimated to be about 194 million pounds last year, but there was only 155 million pounds available. So from a macro themes perspective, you've got the tailwinds coming from the demand side, but you've also got a supply shortage. So we hope that, and I think everyone who's invested in uranium already hopes that those fundamentals play out. But the market is in a bit of a sort of spot where there are other factors driving it. And because it is so opaque, because it isn't visible and it's only trades OTC, no one's got a firm handle on what the drivers of the market are. But as you look at it, we expect that there should be some positive movement in the price appreciation. But we obviously don't know. And we hope to play a part in creating more of that price discovery and transparency down the line.